Krishnamurthy Subramanian, Executive Director of International Monetary Fund and a former Chief Economic Advisor, is joining us live. Professor Subramanian, really appreciate your time. With the Supreme Court asking SEBI to probe short seller report, that is the Hindenburg report, that whether it violated and caused harm to investors, do you think suitable action must be taken so that it acts as a deterrent, sir?
Very good evening, viewers, and thank you, Maria. You would recall, Maria, when the Hindenburg report had come, I had written a piece in the Times of India putting into perspective the gross misjudgment or maybe other motives with which Hindenburg had called the Adani saga as the worst fraud in history. I think today's verdict clearly shows that that was something that was a complete figment of imagination. And by directing SEBI to take care of this matter by looking at whatever abnormalities and misdemeanors that might have been committed by Hindenburg and other associates, I think the rule of law has actually been upheld significantly, and it's great both for India Inc. and for the India growth story.
So how do you really ensure that the interests of Indian investors is protected? Because the court said that SEBI and the government should take into consideration the recommendations that were made by the committee to strengthen interest of the Indian investors. They suffered a massive loss.
Two things, Maria, I think we have to keep in mind. First, all investors and retail investors who invest in stock markets are always aware that stocks are actually a risky bet. There is some risk involved. It's unlike a fixed deposit, and so they have to always invest with their eyes open. When they gain, they also actually can, have to be ready to lose sometimes, and oftentimes, maybe because of nefarious, activities like the one that Hindenburg might have indulged in. But the second crucial aspect is that there's been a significant correction in the stock price after the decline following the Hindenburg report, and so investors have actually recuperated significantly their losses. A crucial point that I want to bring in here is the role of several commentators, including folks that have occupied, august offices in India previously, in building up such narratives. Let me give you a specific example. People talk about cronyism and such stuff. Yesterday, there's a New York Times article also, which where someone is mentioning about the 2 A's. So let's take a perspective here. If you look at the United States, Apple's valuation has increased by 3 trillion from 2010 to now. In that period, the GDP of the US has increased by about 10 trillion, from 15 trillion to 25 trillion. In other words, 30% of increase in US GDP is accounted for by Apple. Do you call the United States a crony market, a crony capitalistic society? In contrast, if you look at Adani over the same, period, the contribution of Adani to India's GDP increase would be about 1%. So, we have to be very careful that such commentators with vested narratives, vested interests, do not, push the narratives like this. And I think that is as critical, from a macroeconomic perspective.
Yes, let me, I would like you to elaborate a little bit more on that specific point that you're talking about, narrative setting. Do you think that narrative setting was done for vested political interests? And that is the reason why we saw that kind of upheaval of sorts, in which questions were raised about the conduct of SEBI as well. And would you say that the Supreme Court verdict actually reinforces the confidence that people of India have on these institutions?
I think this entire episode clearly demonstrates the that rule of law is absolutely being followed in India. I cannot talk for people who actually do these activities, with various designs, various vested interests. But I think it's crystal clear that if 30% of the contribution to U.S. GDP increase from 2010 to now is accounted, let's say, for by Apple's market capitalization increase, then what are we talking about when all these commentators talk about cronyism, etc.? It's a simple fact that when a country's GDP grows, some companies actually which are implementing their businesses well, their valuations will grow. So this entire narrative, and today I saw a Bloomberg article as well, which actually is as poor in its analysis, and talks about similar stuff. These are all folks with vested interests who don't seem to enjoy the India growth story doing so well.
So then how will India be countering that? My question is, since you are in Washington, D.C., and I'm sure you're privy to many of these reports that are coming out, what kind of mechanisms should be put in place?
I think, as I mentioned earlier, the Adani saga is a brilliant example. The law took its own course. The Supreme Court directed SEBI to go and investigate, and SEBI is rightfully the regulator to actually go and examine this. And so, in any instance like this, the law should take its own course. And and over time, many people were jumping up and down. When the Hindenburg report had come, all of them have been put to silence now with the report that has come in. So I think the bottom line is very clear. Actually, just put our head down, ensure that rule of law is implemented, all the checks and balances are implemented, and when the Indian elephant walks, there will be actually many other animals that will be barking. Let them bark.
And would you say that there are measures which are needed to perhaps protect investors?
I think that is the job of SEBI, which it has been doing very well, and let SEBI do its job on this, as the Supreme Court has already directed it to do.
Would you say that this judgment will put this entire issue to closure, or will there be some more chatter around it?
Look, Maria, as I've said, those with vested interests will continue chattering. Today, some months back, it was Adani. They'll find something else. So as I said, some of this chattering will happen, of course, because the India growth story actually is doing so well. I think we should just continue putting our head down and grow. And that is the best answer to all these, naysayers.
Okay, my last question to you before I let you go. I know you're in the middle of something, and I'm grateful that you could give me time for this interview. How much of the interest was there world over, particularly because of this? The global investors, how much were they viewing this with anticipation, the Supreme Court verdict? What was the nature of anticipation around it?
So overall, this episode, at the time when it happened, there was a lot of interest. But events since then have clearly laid out that the rule of law has taken its course, and I think that will definitely strengthen investor sentiment that processes are being followed, and the regulating agencies who are responsible for ensuring smooth conduct of capital markets have been directed to do their regulatory activities by the highest court in the land, and that will definitely give a strong signal to investors that India growth story is actually being embellished by rule of law being followed in cases like these.
Right, Professor Subramanian, really appreciate your time. Thank you so much for joining us.